The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner, primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. Should say 3:21, right? The chairman, he has about a 45-minute press conference. It's the Federal Reserve, and they keep rates exactly where they were, 3.5 to 3.75%, the overnight rate. And you are talking about they're pretty upbeat on the economy. We'll pull up the statement in a moment as well. But yeah, the upbeat tone on the economy right now, whether we're going to get the future rate cuts. Now, interestingly enough, the markets, we're right back to where we were. Okay, you got a 10-point incline. I say from where we were like 11:30 this morning. You came into that number at the announcement at about 7,000. There's your 2 p.m. volatility. You see the volatility in the chairman. He comes on at 2:30. We drift higher when he's talking. You take a look at yields right now. While he was talking, we made a low at the beginning of his speech in terms of price, and the 10-year backs off a bit, but pretty muted response, right back to where we were in the middle of the day. The market pretty much expecting this. Okay, the odds that they were going to cut, 2%, right? So they come out, things have changed. We'll look at the statement, but yeah, we got yields right now at about 4.25%. You jump over the dollar as yields were rising a bit. As yields were pulling back a bit, you had the dollar pulling back a bit as well, 96.46, still well off of the lows of yesterday, 95.55. But gold's not slowing down, no matter what the dollar does. Gold's up $249, 53.69. Yeah, you see it, 2 p.m. Eastern time, and then while the chairman was talking, gold went up $60. Yeah, $50. Right now, gold up $248, all-time highs, folks, as I come to you. Silver, $114.71, up by $8.77. Jump over to platinum right now, up $105, up 4.2%. Copper, up by 1.7%. We take a look at the NASDAQ 100, 26,202. Take a look at the volume right now. And we'll see how we come in. 37 minutes left to go in the trading day. On the Fed day, you could get some volume, but today, no huge reaction right now. Markets drift a little bit higher. There was the volume at 2:30 when the chairman started, and we trailed off a bit since then. We'll see how we come into the close. Markets just chopping around. You jump over the VIX. I was talking about this earlier. Now, we're backing off a bit. But you put that VIX on a daily basis, and you got higher highs and higher lows. Nonetheless, the VIX sitting 15 pennies lower today at 16.20. And when I look at that chart, okay, the VIX bottomed out on Christmas Eve, of course. Nobody was in town Christmas Eve. Half a day in the markets. We had an S&P sitting at 69.88 on Christmas Eve, and we had a VIX at like 13.50. Well, we got a VIX at 16.50, it's backed off a bit. Meanwhile, the S&P's higher. So the VIX been rising. Makes sense. You come back from the holiday trading. Take a look at the volume on gold. Just massive days over and over and over. I say that in a great way. Just massive volume days. You get this acceleration 8 days ago when gold was only at 4,600. And today might beat that. We're at 378,000 contracts. And on a weekly basis, watch this, man. We got 2 full trading days left, and we're already at 1.1 million. Not sure we'll get to 1.9. Okay, but we're probably going to get above 1.33, which would be a trade higher on last week's volume as well. Silver. Silver's going to do some record volume, man. 874,000 contracts was the number the week of January 12th. You already have 700,000 contracts, folks. 700,000 contracts. We had 2 full trading days left. this week. Look at the volume. We do 160,000 today. Yeah. And the volume dropping off a bit on the daily. Yeah, big volume on gold. All right. You jump around to some of the headlines. So, not a lot of headlines, right? And remarkably, you could say that the market just had it priced correctly. The market had no cuts for Powell left. That's it. The first time we're going to get a cut is going to be the first meeting for the next Fed chair, folks, which is in June. That's what the market thought right now, and that's what Powell came out and said. All right, Amazon. Come back and talk a little bit of Amazon. So Amazon and Alphabet are next week, okay? Tonight we get Microsoft, Meta, and Tesla. We get Apple tomorrow. Amazon down about 0.5% off $1.40 right now, and as I mentioned, you get Microsoft coming out with their numbers after the bell, and we'll take a look at Microsoft, Meta, Tesla as well. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio.
They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. It's Fed Day. They stay put as expected, and we have markets basically chopping within about 5 points of where we were. S&Ps, we hit 7,000 in the cash for the first time today. You hit a high of 7,043 in the futures. We're trading right now negative by 2 points at 7,006, just above where we were when the Fed made that announcement. You jump to yields. You know, if anything, you could say a little bit of higher price, lower yield when the chairman was talking, but we're right back to where we were for the majority of earlier today. So no move there. You jump over the 2-year, okay, and yeah, a little bit of lower price, higher yield. I'm trying to read into it, but pretty much you were exactly where you were most of the day. Okay, we jump over to Microsoft and Meta. So they are out after the bell with Tesla tonight, as if you don't have enough going on. Microsoft down 0.1% right now. And yeah, this is the first of the 4 AI spenders. And the other 2, Alphabet and Amazon, as I mentioned, they're out next week. The 4 of them combined, Microsoft, Meta, Alphabet, Amazon, they're going to spend $500 billion. That's the type of CapEx. $500 billion is the number that they're looking to spend, up from 366 for 2025. Is that 140 billion extra? Yeah, my goodness. Talking about almost a 40% increase in CapEx. Now the fear is showing up, as they say in some of the charts. You got Microsoft well off the highs, Meta as well. And yeah, they're going to spend more money. And then if they do spend more money, right, if the expectations, they come out after the bell and they say, guess what? We're just going to spend even more money than you guys thought to build it out. Well, they could go down, and then who's going to be the benefit? The benefactor? NVIDIA, Broadcom, Micron, the likes. Now, with that said, okay, you go over to ASML. From 1609 to a low intraday of 1411 and 14 pennies. We're at 1430. You're down by 1.6%. Now, what's remarkable is this one's from this morning, right? ASML adds another $100 billion to the market value in just 2 weeks. Okay, but yes, this was calculated in where we were this morning. All right, what are they putting it at right now? Let's see where we're at right now. It's still a remarkable acceleration. We'll go back on a weekly. $555 billion in market cap. They have about 400 million shares outstanding, 388 million shares outstanding. And yeah, you're up more than 100% from where we were in August. I mean, as we all know, remarkable acceleration for just the size of these companies, right? To grow at over 100% in a 5 to 6 month period, and meanwhile, 5 or 6 months ago, you had a valuation of $280 billion, right? $270 billion in August, and now you're pushing 555. But this thing was at 1600 this morning. Even if it was briefly so, it was sitting between 1525 and 1500 at a time when people are awake. Now, what does happen is, look how little the volume is. Okay? 10,000 shares ASML, 20,000 shares, 25,000 shares. And then the market opens, 565,000 shares, 315, 270. So we've all seen those moves if you watch the market enough. Be aware. You know, true supply and demand, yeah, it starts getting reflected when that opening bell hits on most occasions. Oh boy, folks. Okay, it's not stopping. Look at this. 53.98. Heck, I'm not going to say we might hit 5,400 while I'm on the air. We might hit 5,500 while I'm on the air. The way this gold contract's moving right now. Up by 5.4%, up $276, 53.97. Let's check out the dollar. Rolling back over. We were just at 96.75 going into that presser. Went down 35 pennies from there at 96.40. So this out today, and you're going to see more of these stories. One of Canada's biggest institutional investors is citing the Swiss franc, the yen, and gold as potential alternatives to the dollar as they are trying to push back politically on the greenback. And yeah, you have treasuries, of course, in focus, but the battle's on, man. And this dollar just looks weak, folks. And it's been weaker on many occasions. Okay, this is not some doom and gloom story. All right, look how weak this dollar was. At times that, as you pulled out of the 2008 financial crisis, okay, but the dollar was weaker from 2003 all the way up until 2008. Dramatically weaker. So the next stop on this chart right now is 90. Just hanging out here. From December 2020, the lows of 2018 as well. And that's the same area that's been an area of resistance. You got this area back in 2005. You topped out at 92 and change. In 2009, you came within 38 pennies of the 90 price point. And then in 2010, you got within about $1.30 of that area as well. And that's getting within $1 of that area. And then you go from 88 down to 72. And then you move 16 points. So, simple buying and selling. And what is out there as well is that our rates, even though they're not moving as low as some would like, as quickly as some would like, they're still going to be under pressure, which is going to be pressure on the week on the downside to the dollar as well. So, gold and silver, here we go, 54.04, right? Look at this move. Look at this monthly. Okay, now be careful here, folks, all right? Because, my goodness, on a monthly basis, have the last 2 years been enough fun? From 2,000 to 4,700, okay? And now we're going parabolic in gold. Silver was the parabolic one. And now the squeeze is on is gold and silver. Look at this move. And the dollar's not even reacting, man. Okay. It's going to be an interesting 22 minutes left in the trading days. 54.06 right now. 54.08. Can't talk quick enough. Look at this. Gold's up over $100 since 2 o'clock. 54.10. Be careful in the metals right now, folks. Okay? Easy come, easy go. And hey, we got a trader's market with this volatility, though. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps negative by 5 points, pretty much right where we were when Chairman Powell started with 2 p.m. Eastern Time, the announcement, 2:30 the press conference. You check out the 30-year right now, down by 15 ticks at 115.02 right now. You have that slide when potential tariffs back on the EU with Greenland. But boy, you look at it, right? 10-year. Just cannot, 30-year especially. Lower price, higher yield. You look at what the Fed's done, doesn't matter, man. Look at this chart. You were just pushing lows, which is higher yield, even with the Fed. That's the most pronounced. The 10-year, not as pronounced. You're well off where we were at the beginning of last year. But then you look at the 2-year, which is what matters for the Fed. And yeah, the 2-year, that's calculating their cuts. You're at 104.04, the higher boundary we've been at for the couple years. And yeah, something's going on in this gold contract and silver market and metals in general right now, folks. 54.24. I wasn't joking when I said at 53.98. Look at this thing, man. It's whether we're going to hit 5,500 or not. And silver going for the highs, within $1 of the highs at 116.78. You know, some of the equities are on fire today too. Look at this acceleration we just got in CCJ. Since 2:30, CCJ just traded from 128 to 135. Harmony's on fire right now. Okay, trading from under 25 to 26. You're up 4% on Harmony from where we were at that time. On the other side of that, I was jumping around. New Gold actually in the red today. Let's jump around. First Majestic up 1.7% right now. Alamos up 1.6%. Vista actually down 2 pennies right now. Okay, the XAU in the green though, up by 2.1% right now. The XAU, HUI up by 2.5% right now as well. Jump over to platinum, 26.75. And, you know, jumping back in for a moment, when you talk about, it's not just pure, straight politics and trade deals in terms of why Canada could potentially shift some of their cash outside of the U.S. And when I say that, okay, it ties into this article. You have the Treasury Secretary out there touting a strong dollar today. Okay. He said the U.S. is absolutely not intervening in the currency market to sell the dollar against the yen. Asked whether the U.S. might take such a step, he said, we don't comment other than to say we have a strong dollar policy. Okay. But the policies of the president matter more so than even usual in this administration. And the president, when asked whether he was worried about the dollar's decline, said, no, I think it's great. And he does like a weak dollar. And there's advantages to exports for a weak dollar, okay? But in the context of the Treasury Secretary trying to calm markets, and then you look at, okay, that when you're making investments in the U.S. from foreign countries, and the investments, they have to come back into Canadian dollars, right? So you have Canadian investors, institutional investors, investing in U.S. assets, okay? But guess what? No matter how well those assets perform in America, if the dollars are worthless, and I'm exaggerating, when they trade them back into Canadian dollars, which is what they have to do, yeah, then that's a problem. The acceleration in U.S. efforts to address global imbalances, combined with Trump's unpredictable and unconventional approach, could weigh on the U.S. dollar in the years ahead while potentially lifting inflation and bond yields, the pension said in a report. And yeah, we all know those currency risks. And, you know, you look at the markets can always move faster, further than you think. I mean, look at the metals market right now, okay? And you look at this dollar. The world was okay when the dollar was at 70, folks. If we head back down there, it'll be okay. I think a stronger dollar in the longer term is what you want. But yes, there's benefits. And if you look at this chart on the dollar, okay, outside of the COVID acceleration from 2022, when you cross that 100-point mark, to when we just pulled back about a year ago, outside of this area right here, okay? There it is. Outside of that area, for most of the last 23 years, the dollar has been weaker than even where it is, let's just say at 100, right? Which is where we were 8 days ago. So outside of that acceleration in COVID, the dollar's been weaker than it's at. So, yeah, there is some room for the dollar to the downside right now. You better believe it. And you add on top of everything else, very tough for the dollar to catch a bid right now. We're at 96.38. Okay, we're pulling lower. And, you know, you can say the same thing, as in, am I stepping into gold right now, folks? No, I'm not stepping into gold at this price. Okay, we're not going to buy a breakout at 54.24 right now. And, yeah, could it go higher? Of course it could. And I'm telling you that it probably will even right now, right? But the risk-reward wise, you know, you're in here intraday and you're trading it, that's phenomenal. Okay, keep your stops tight. We are going to have remarkable swings. But if you're swing trading it, looking for big moves right now, I think there's dramatic risk in a market unless you're watching this thing like a hawk almost every minute, because this is a perfect example. It's gold up. Yeah, gold's up $400 in like the last 24 hours. I had to check my math. Yeah, $400 in the last 24 hours. A little bit longer, 30 hours. And we go from 4,600 to 5,400 in the matter of 8 days. It says something, folks, okay, when you're talking about a market that is on a heck of a run to the upside, right? If only we could ever keep this type of an acceleration. And where do you put that best line fit, okay? You be the judge. An art, not a science. Somewhere around there, but we got an uptrend channel, right? Well, folks, we're blowing away that channel to the upside, okay? Things are going parabolic from about the 4,600 level now. And realistically, we're still not that far off from the October highs when you had all this volume in gold. So trade the heck out of it. Keep your stops in place, though, because these markets are not behaving rationally. The yield market's a little out of funk. I know I just saw somebody post something about the 30-year, and was it Gunlick? Yeah, the 30-year is definitely behaving a little bit weird. So Trump's going to impose a naval blockade on Iran by Friday. Get your gold, folks. Say it half kidding. 54.22. My goodness, man. Jump over to silver. Okay, silver's 25 pennies away from the highs. 17.46. Oh, be careful, folks. You know, I know it seems so easy right now to step in and all this thing does is go up, but we are coming into a double top right now, and look at the daily. We don't have the volume that you had on January 26, 2 days ago on silver. You did 312,000 contracts. Today we're at 166 right now. Okay, take a look at gold. Gold is strong, man. All right, we're coming right back. One more segment, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Yeah, we got oil rocking as well. Back to the highs of early this morning, 63.42. And on a daily basis, almost as much volume as yesterday, and crude catching a bid. We were just trading at $56 20 days ago. We're at 63.41. We check back in on gold. We pull back slightly, but yeah, $5,400 on the dot. 1 ounce of gold. Silver, right up near those highs, 116.26 right now. And as I mentioned, we got Microsoft and Meta after the bell. So Microsoft up by about 0.2% right now. Meta down 0.4%. You get Tesla after the bell today as well, up 0.5%. And we get Apple tomorrow. Apple negative by 0.6%. We take one look at that statement, one more look at that statement, okay, from the Fed. It was strong wording, but remember, he's got 3 meetings. Next chair's got 5. Market's only pricing in 1 to 2 cuts. That's talking about this year. Next chair has 5. I think look at the risk reward, but man, Powell, yeah, very tough to see any cuts coming while he's here. When you're talking about, right, even just the first statement, available indicators suggest the economic activity has been not moderate, which was in their last statement since October. No, at a solid pace. Job gains, they're not slowing this year. They're just remaining low. Okay? And then in unemployment rate, no longer edging up, shows signs of stabilization. Yeah, their previous statement said the unemployment rate had edged up and indicators were consistent with these developments, basically meaning it edged up in September and it was still edging up, right? Now it's showing signs of stabilization. So economic activity, solid. Unemployment rate, stable. Inflation, it is somewhat elevated. But guess what? Market already knew they weren't going to cut. All right, folks, S&P's up by 3. Let's finish it off with gold. 54.10. Remember, you got Microsoft and Meta right after the bell. Have a great night. Have a safe night, folks. Thanks so much for tuning in. Enjoy your evening. I'll see you tomorrow morning for the Morning Market Kickoff. Thanks so much, folks. Have a great one.